Welcome to Financial Discretion Advised. I'm Abrin Berkemeyer.
I'm Tyler Hafford. Let's cue the music. Hey everyone, thanks for joining us. Today we are going to cover ESG investing, or environmental social governance investing. We've brought a guest on the show today, Jim Bradley. Jim is the founder of Penobscot Financial Advisors. He's also the chief investment officer for us. You may remember Jim from our Social Security podcast. If you don't, go back and watch it. It's a good one. But Jim, thanks for joining us again.
Thanks for letting me come back, guys.
I had to pay Abrin, but we got him on. Yeah, so I want to bring Jim in on this because, ESG has been in the news quite a bit. Anyone following investing's probably heard or seen of this. But, why don't we start with what is ESG? And Jim, I know you've been in the industry for a while. What does it mean to you when you're looking at this?
It's a good question. And like you said, Tyler, it stands for, when you hear ESG, environmental, social, and governance. So those are three criteria that we look at heavily when we're making investment decisions. We're looking at environmental impact, we're looking at social positioning, and we're looking at the governance of the companies that we're investing in.
Sure. And this is something that's kind of evolved to where we are today with it. I know just in my career, I've seen it be quite different from even just a few years ago, where it was just an overlay you'd put on a portfolio and you'd start to pick things out. Maybe I don't like tobacco stocks or things like that. But today it seems to be much more robust than that.
You bet. I mean, back about 30 years ago, there was kind of the seeds of today's quote unquote socially responsible investing. In that, as you mentioned, there were companies that started up back in the days of the Vietnam War, where they didn't want to have, investment in quote unquote the war industry. They didn't want to, be invested in firearms and that type of thing.
Sure.
Other, people came around with their definition of what they thought socially responsible was, whether it was not investing in tobacco or not investing in alcohol companies and that type of thing.
Yeah.
And that kind of exclusionary stance took hold for people who also held similar objectives. And back in the day, it was looked at as being something where, yeah, you can invest for financial reasons, but you can also invest, with a social conscience. However, the two were kind of, at loggerheads with one another in a lot of ways. People, the conventional wisdom was you can do better by not eliminating things from your portfolio than you can by eliminating them.
Yeah. Yeah. And that was, even when I started in the industry, it would always be that kind of trade-off. How much of my return am I going to give up if I want to invest in something that I care about? And Jim, you lead the investment here at Penobscot Financial Advisor, being the chief investment officer. You're doing it a little differently than the afterthought, right? You decided that we want to make this where we started when we're picking out investment selections.
Yeah, you're right. So socially responsible investing has kind of matured, I guess you could say, to a point where, as far as the industry goes, it's no longer this kind of nice to have. It's something that's absolutely core to the investment industry as a whole, and certainly to us as a firm when we're making investment decisions. We take advantage of resources that help us to measure certain things. One of the problems with socially responsible investing in the past was that everybody had different definitions of what socially responsible is.
Right.
Abrin, you might think you want to not hold alcohol stocks in your portfolio, but Tyler might think a good bourbon company's a really good thing for the world, and I would agree. But
and you obviously haven't met Abrin, by the way.
which is that was a purely hypothetical.
Don't worry, we're slipping that in disclaimers at the end of the podcast.
Fortunately, what's come along over time, are some kind of generally adhered to principles, not of things that we want to exclude from portfolios, but things that we actually look to, seek out in companies around those three major criteria, around how they handle their environmental responsibility, around how they are, from a social standpoint with all of their stakeholders, their communities, their employees, and their shareholders as well. But and then from a governance standpoint, how are they set up to deliver a better outcome by not being just stale, pale, and male, just and actually having some diversity at the top of the organization, and then it's kind of driving, and then helping to kind of frame that. The United Nations has come up with something called they call SDGs, or Sustainable Development Goals, where they've identified 17 key areas, like around poverty and clean water and gender equity and that type of thing, in order for us to, as an industry, start thinking a little bit more in line with something that we can all kind of agree on, that needs to be put forward.
Yeah, and that seems to be what is missing at the moment, right? I know that when we're looking at investment selections, we're digging a little deeper than an ESG score we find out on a company or a fund, but there is no uniformity to what is a good ESG score, and how do you come to that, and those types of things. And I know that a lot of folks listening to us are investing on their own or want to kind of make ESG a focus. I think you got to do a little more digging than what's the Yahoo Finance score on this.
You're sure right. Yeah, there's beginning to become more than a handful of organizations out there whose role is to help you to assess how responsible a company is being along those areas. And we certainly use them. I mean, they're helpful to have around. We're kind of unique in our space because we actually take a lot of that ESG vetting of companies and do it internally when we're selecting stocks, especially for our domestic equity sleeve, our US stock sleeve. And as you guys know, it gets thrown around for a big part of whenever we take the financial stuff and we look at companies that are returning well as on their capital assets and priced reasonably and being responsible from a financial standpoint. But we're starting there to get a universe that then we can start to pick apart, okay, which companies in this area are we most comfortable with based upon our values, based upon what we see our clients' values, and we can get pretty creative with that. We can take a look at how a company is viewed by its employees by going through like Glassdoor or something like that. We can actually go in and take a look at the board of directors of the company and see, first of all, how many of them are independent directors? Does it look like typical old-fashioned old white guy board of directors, or is there diversity on the board and that type of thing? And really kind of get creative about how we actually think about a company in our universe should be. Is it creating a product or service that we actually think is beneficial for people? Is it something that we can kind of look at our clients with square jaw and say, hey, this is what we think is absolutely appropriate for us.
Right. And I think that's becoming more and more important as we see big money managers coming out in the news promoting this, is saying this is something we need to pay attention to as investors moving forward, because I think some of that is causing companies to say, hey, look how ESG friendly we are, when in actuality, maybe they aren't doing that, right? They're just trying to get onto this tagline, which requires us as investors to do a little more digging.
You bet. There's a lot of what they call greenwashing out there where, companies just put up, I've seen pesticides, put out as like being just, wonderful, organic, healthy types of things. And they're literally put out there to kill things. So, it's interesting how things can get branded from time to time.
Absolutely. And, we talked about it a little bit, about sacrificing returns in the past to do, is that the other podcast you have to?
My parking meter's expired.
it used to be have that discussion. All right, how much do I have to give up to vote in this way, vote with my conscience in returns? But what we're seeing is actually some outperformance in these companies that are putting it at the forefront.
You're absolutely right. Yeah. I mean, go back a year before this podcast. In case you can't remember, Abrin, we were having a little bit of a dip in the market at the time, and it was interesting to watch because a lot of the socially responsible indices, or ESG focused indices, were actually doing a lot better, kind of working their way through the debacle that was going on at the time. But at the end of the day, it's not all about just being nice or being aspirational or anything like that. But certainly it is in part,
Right.
but it's not going to work if it doesn't actually lead to better outcomes from an investment standpoint. We're fiduciaries. We have to be looking out for the financial well-being of our clients.
Right.
So how do we square that with also wanting to be ESG centric? And the answer is, it's actually pretty easy, because at the end of the day, companies that are better stewards of their environment, companies that do a better job of relating to all of their stakeholders, from employees, line workers, up to their board of directors, companies that bring a diverse set of views to how they conduct business and actively seek that level of diversity. Frankly, you can look at more than a handful of metrics to see that over time they're doing better.
Yeah. Yeah. And it's nice that folks don't have to make that compromise anymore. And, as our generation, Abrin and I's generation, starts to come into wealth and starts kind of driving that ship a little bit in the investment world.
He's kind of dating you there, Jim.
I'm glad to get an opportunity to sit with you young folks from time to time.
But this idea of voting with your money seems to be prevalent in our generation. The idea that we want to put our money to work in companies that we think are going to be good for us, good for the environment, good for the country moving forward. And it seems to be just much more activist than it has been in the past when it comes to investing like this.
And what you're referring to there is actually, under the kind of, overlying, category of socially responsible investing, ESG is part of it. And then there's also impact investing, which is actually there to fulfill the objective of hitting measurable results that go beyond just financial measurements. There's some of that out there too, which is really important, because at the end of the day, you can talk a lot and you can try to legislate a lot, but really what's going to create change, what's going to create positive things for, whether it's our environment or the social justice in this country and in the world, it comes down to, at the end of the day, following the dollar.
Yeah.
Where's the money? And that's really what's going to be able to drive things a lot better than anything else, realistically.
Yeah. And now, Abrin, what do you think? And I'll ask both of you this question, but trend in the industry, or do you think we're making a shift towards this being something, just a big focal point in the investing world?
Yeah, I think like Jim said, you got to follow the money. As more people that's all the market is it's just supply and demand of money. Things go up when people are pumping their money into it because they see it as long-term. Things go down when people see, businesses going off the way, and gonna have losses in the future because they're not gonna be able to make it in tomorrow's economy. Sure. So you see that that's just what the market is. So if more people are going to start pumping their money into things that are more ESG focused, then that could be the broader movement going forward. The shift.
Yep.
I do think there's plenty of trends within that would kind of be like subcategories. I mean, you look at tax provisions. There's right now hybrid vehicles, electric vehicles. There's a lot of tax credits out there that incentivize people to go out and buy those things. That makes that makes the revenue of the company that are producing those vehicles look a lot better. What happens when those tax incentive goes away? do people keep purchasing those, or,
Right.
does it drop off because maybe the tax incentive period wasn't long enough for, the overall shift to happen in the marketplace.
Sure.
So, there could be definitely bumps along the way and things of that nature that would be, more towards the trend. But I think overall, it seems like there's more of a market shift in general.
Yeah.
Just because you've got the broad majority of folks as they move towards this way of investing, it kind of changes the underlying decision making within the market. So
I agree. I was able to get out to a global CFA conference a couple of years ago out in Hong Kong, and these conferences really can be kind of an eye opener as to where the industry is and where it's going. Fully a third of the breakout sessions at this global conference were ESG focused.
Yeah.
You look at the challenges we've had over the last year and how, fragile human health and well-being and economic health and well-being can be.
Yeah.
And then you look at something as big as climate change and kind of look at how much bigger that is of an issue over time. And it's not difficult to kind of put those two things together as to why it's not only a good thing, but it's actually existential. It's vital that we consider those things when we're doing our investing.
Yeah. I think I agree with both of you, and it goes back to following the money. When I see big money managers out promoting this or saying that it's something we got to pay attention to, when I see wirehouses pumping, tons of money into marketing around it, it tells me that this is probably not going away. This is something that is going to be with us moving forward, and I think it's a good thing. It's allowing people to invest with a conscience,
Right.
and I think that's important. Especially for new people getting into the market. I think if you believe in what you're investing in, it's a little easier to continue doing it. Behaviorally, I think it's a good thing. Well, we'll finish up here, Jim. All of this stuff, investment selection, what's going on in the industry, all that is great. You decided to not just talk the talk, but walk the walk. As a business owner of Penobscot Financial Advisors, the ESG filter that we're putting on it doesn't stop at the investment selection.
Well, you're right. I guess it should be obvious, right? I mean, if we're investing in companies that are leaders in these areas, environmental, social, and governance issues, not because we're necessarily, trying to just feel good, but because we're trying to get better returns for our shareholders.
Right.
Why in the heck would we not want to espouse those same things? So whether it comes down to, the fact that, we went paperless a few years back, or, kind of rethought all of the resources that we consume and try to do them more efficiently,
Sure.
That we built out new office space in an energy efficient way, the fact that we're, really taking big steps to be better members of our community as a whole, that we're trying to take proactive measures to increase the diversity of our team, and not only at just a basic team level, but at the leadership level. These are all things that we're not doing for any reason except for the fact that they're just good business.
Yeah. Great stuff. Coming over to Penobscot Financial Advisors, it seems to be something that's important. I'm glad you went paperless because I hate paper. But to your point, right? We stepped into this pandemic. Everything changed in the working world, and I think being ready to do that kind of kept us afloat, and we didn't really miss a beat.
It happened to work out well.
And yeah, so I know that you weren't planning for the pandemic 4 years ago when you went paperless, but it ended up being, like you said, just good business to be able to sustain. Well, I want to thank Jim for coming on. Anyone who likes Jim's opinion or just wants some more education around this stuff, Jim did a great blog on ESG. He writes a blog for the firm every Friday. We lock him in a room and he can't come out until he produces something. But make sure to check out our Facebook and our website. Tons of topics on there, some really good content. Tell your friends about us. You can find us on any podcatcher. You can see us on YouTube, spread that word. But anyone who's maybe interested in ESG investing, please recommend this podcast to them. That's all I got, guys.
Thanks for having me, guys.
Yeah.
Hope you'll let me come back again sometime. Excellent.
Now get in the room, Jim.
The foregoing content reflects the opinions of Penobscot Financial Advisors and is subject to change at any time without notice. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Thank you.